Where are you joining us from today, Gareth?
I'm sitting in my room in Sydney, so I'm just facing away from the sunshine that's outside to be with you today. So, but I'm looking forward to the talk. So.
Awesome. Well, I'll hand it to you to present because I know you're going to kick off by telling us a bit about yourself and your story.
Sure. Let me take the challenging technology step of getting my slides up and running for you. So hopefully we can see the slides.
Yep, we've got you perfectly.
Excellent. Okay. All right. So I'll just sort of kick into it. So I'm Gareth Gumbley. I'm the founder of Frollo. I started Frollo in 2016. For those of you that have been in a startup or work in a startup, you'll know it's quite the roller coaster. And 2020 was certainly one of those for us on so many levels, but we'll talk to that throughout the slides today. So Frollo is a purpose-driven fintech. So we set about trying to solve the problem of helping people live a more financially healthy life, to help them feel good about money. So it was lovely to follow on from Anson today and the language he used and also the kickoff at the beginning to talk about empathy and why it's so important to get that into our finances. And that was really my drive in building the business. It was to look at the stats that 60% of the population are stressing about their finances. That might not be every day. That could be once a week or once a month, in the last few days of the month. But certainly they worry about money. And if we can bring technology into that conversation that can help people feel better about money, then that has a massive impact in other areas of our lives. That impacts our relationships, that impacts our work, that impacts our health. So it's just not about financial well-being. It's just about our overall well-being. And that, if I had a bigger goal to try and achieve that, that was where I wanted to have impact. Was just not about just money. What else could we really do that? How could we do that? So to achieve this goal that we had, which was how do we impact millions of people's lives? Not just those I can talk to and touch and help them with their money. It was to build a technology business that had a distribution model, which was to license our technology out to other banks or large brands or fintechs. People that had the reach. And give them the features to bring to life those wonderful experiences that Anson was developing and showing earlier. So this year we were the first company in Australia to access the consumer data right, and my presentation today will sort of kick into that theme as how does access to data and financial wellbeing features come together, and how can we make a difference? So today we're well progressed to power a number of banks. We make millions of API calls already under the consumer data right. And at the core of what we do, we're really a SaaS solution that's licensing our technology to help power open banking use cases, whether that be personal financial management tools, or just helping an organization deliver on the promise of building trust and engagement around the challenges of money. And I've certainly seen from when I started this business to now, quite a shift in the levels of conversation around financial well-being inside the banks, and the level of investments increasing on an annual basis, for sure. So what we offer are features that some of which Anson's described today, but transaction enrichment, categorizing a transaction, providing merchant logo, providing those insights to somebody about their money, and then developing features that sit on top of that, which are how can we help them budget? How can we help them achieve their goals? How can we help them understand how they sit relative to other people? That was something I learned in consumer finance, was that people always thought that their financial situation was unique and that they had a really that their money problems were their own money problems and nobody else had them. And then sitting as a bank or a finance organization, you're looking at people and we create models that put them as cohorts. We bucket them up and we make them all look the same to be able to determine risk and determine how we want to engage with them. So it was, how do we bring that human element from am I individual, or am I part of something bigger, and how do we help people? So our features that we've been developing, I love Anson's analogy actually of the magic dartboard. I thought it was just brilliant, and I really loved that. And actually, I think it's better than the one we use. But we use the analogy of self-driving finance, and I see it as a shift from bringing in reverse parking sensors to self-parking. And then on to self-driving. So initially it's all a bit weird and a bit disconcerting, but over time you build confidence how many of us actually use our mirrors now to park if we have a camera on our car? We're using the cameras, we're using the sensors, we're not using the mirrors anymore. They're still there, they won't be there for much longer. And what we believe is the same will happen with our money. So we can focus on driving the things that are less important and less, or things that we can automate, where we can make sure your money's in the right place at the right time to do the right job, versus you having to think about that all the time, making sure that you've got enough money to pay the bill that's coming up. So moving from information to action is a really exciting opportunity. So today we power banks like Bank. We help them build their mobile app. We're working with Virgin Money Australia, who are building a new digital proposition. They're taking financial health seriously, and we'll be launching early next year. And what we have is pretty core to their proposition. So I'm excited that we get the opportunity to partner with these organizations to be able to forward think. But I guess I just wanted to wind the clock back a bit. I mean, that's all about the traction we have now in our business, but really what drives us every day, what is that North Star that we work to, and why I started Frollo. So, from my perspective, money is hard work. I know from my family growing up, we had many struggles. We had a huge amount of stress around money and anxiety, whether we could make the mortgage each month, whether we were going to lose the house, whether we trade out paying a utility bill to buy groceries, and how did we get by? How did we make, live our life? So, we developed many side hustles. We developed a little piece of paper back then. We didn't have apps to track our finances, but we just keep track of our receipts. And we sort of learned how to manage our finances. It wasn't something that was taught to us. It wasn't something that was given to, I guess we could turn to anyone else in the family to give us advice. And what I was hoping is, with Frollo, we could build the technology, put it into the hands of those with distribution, build the story, build the purpose that really makes an impact for people, to help them with finance and help them with money and help them feel better about money. Not in a, I'm going to go lay in a bath of champagne, I feel great about money, but just so you can focus on the more important areas of your life, like family and health. The name Frollo really came from, wherever you are in your finances, there's always someone in front of you, and there'll always be people following you, a bit like these footsteps. So, and if you all work together as part of a community, then actually you can all get ahead together. And that was, our old tagline used to be, let's get ahead together. And we've sort of shifted into this more human language of let's feel better about money, let's feel good about money. But the essence is the same, which is that if we all contribute and work together, we can actually deliver a better outcome. And that's why I'm here today, to try and do that. So in terms of our business, we have a consumer app that we use to kind of showcase the features that we sell to our banks. We have a dozen banking partners with, we have 120,000 users on our consumer app. We have hundreds of thousands of users, coming onto our platform, and we're, currently the leader in open banking. But all of that is, just kind of numbers and people. But what are we doing? What are those features really driving? So what we're trying to do is give users a full picture of their finances. We're trying to help them stay on top of their money, provide them insights and tips. But really, we sort of see three big jobs that we're really trying to work on. The first is, how do we help you reduce debt? Right. So, the typical household in Australia is either in debt or striving to get in debt to be able to purchase a home. And the second is kind of aligned with that, which is, we might be a saver. We're trying to save because we want to purchase something. We might be saving because we want to get our house deposit to then be able to buy a home or buy a car, which will help us improve our career. So they're kind of two big journeys we have when you join the app. And the third is, just reducing financial stress. So, how are you feeling about money, and what are we doing about that? One of the things that we do is, I think is similar to the way Anson was describing things, which is that we're really proud of the positive impact we have on people's financial well-being. We measure what we're doing on a daily basis. We build our features kind of from the impact that we're looking to have back to what does the feature need to do. So you're almost deciding what's the outcome we want to have. What's the WhatsApp message or the Instagram chat that I have with someone that is, I love Frollo because of this. I love, my bank because it's helped me do this. So we measure things like reducing credit card debt. We measure things like increasing savings balances. So we see typically we can reduce credit card debt by $400 over a 6-month period. We can increase their savings by $1,000 over a 15% period. They're different cohorts, right? Different types of people engaging in different features. But what we're doing is clearly having an impact. We're able to measure that. We have $150 million in savings goals on our app. And then we've created these challenges inside the app, which were community-driven challenges that came from customers that we have on the app that said, hey, would it be good if I could get my friends together to help reduce the amount of money that I spend on Uber, or how much I cut back on my cafe spend, or switching my energy provider can help me save money. And we've had $15 million in real savings from changing people's habits and behaviors, which is money in their pocket, is money in their lives, and helps them build a better experience. So that's a little bit about what we do, how we do it, and some of the example of some of the benefits we've got inside our business. But I thought it would be useful to just give everybody a quick overview on the consumer data right, and why it's so exciting and why it's so meaningful. It's the open banking, all the consumer data right, the language is interchanged, gives Australians greater control over their financial data. It's a government mandate that financial institutions known as data holders, they hold your information, make it possible for you as a customer to share your data with a trusted third party. That could be Frollo as an example, or that could be another bank, a mortgage broker, that could be a financial advisor. And the information that you can share, this is information that used to be in a big vault, that the bank owned. It was your data that they wanted to control because it allowed them to generate product information and deliver a better experience. But what we want to try and achieve is making sure that there is competition in the marketplace, and that everybody is an individual and everybody gets the opportunity to get better financial products. So the data that we get is things like the account balance, we get the transaction information, the financial products you have with the institution, including details around that, which is, when did you take out this mortgage? What interest rate are you on? When is the next payment due? What's the minimum payment you have on that product? Really, really rich data that, if you think about that in the case of financial well-being or underlying financial literacy, then you're able to drive services and features to a customer, which are, this is the product you're using today. This is how you're using it. You're not using it in the best way possible. And this is a way for you to get the most out of the existing financial product you have with us today, or indeed switch to another product. And so the purpose of the data sharing right from the government is really to make it easier for startups or other businesses to build innovative products that compete with banks, result in more competition, and ultimately we deliver a better outcome and a better deal for consumers. So what does that really mean? We as Frollo did a survey recently. We interviewed and ran a survey with, I think it's about 160 leaders in the industry, banks, fintechs, government, about what is the value of open banking data and what are you going to be using it for. And, what I'm showing here is, what are the most popular use cases? It's clear that there's a potential to really change the way Australians interact with money, the way they interact with financial institutions. So the first one is a use case around loan applications. So using open banking data to streamline and improve the process of providing financial information. What does that mean? That means, how do we get a faster time to yes for a bank, and a faster time for a consumer to get to the end goal? Their objective is not to get a loan. Their objective is to get a house. It's to get a car. It's to get the thing at the end. How do we bring that forward and reduce the anxiety and stress around that, but also deliver a more accurate picture and a better user experience? So today we might go to our internet banking, we might download a bank statement, we might print that off, we might hand that to our mortgage broker who scans it into a thing, you send it to the bank. We'd imagine, process issues, can go wrong all the way along this, but with open banking, what's possible is to create a connection to the consumer data and download 12 months worth of data, categorize that, enrich it, prepare it as a statement for a financial institution, and prepare it as a statement for a consumer to better understand their money. And we can do that in 20 seconds. So the information exchange and the improvement in quality is incredibly powerful. Another interesting use case is multi-banking. So when we think about neobanks coming to the market, we think about our financial lives. We know that customers on Frollo typically connect 5 different accounts to us. So they've got relationships with multiple, 3 or more financial institutions, 5 different financial products. And that's starting to get complex, right? If we're going to try and manage our finances with a mental model, I'm going to try and remember what products I have. I'm going to try and remember what money I've got in different places. That becomes really challenging. And then what's the interaction between those? What's the complexity I've just created by opening another savings account with another bank? Am I really optimized to make sure that I can actually deliver on the features of that product that I've signed up to? So imagine, the world is that you're inside your ING app today, and you can see Westpac credit card, you can see your CBA bank account. That's an initial use case that we'll see coming out of open banking, along with the lending piece. The other one that we'll start to see is on top of this information, where we're aggregating data, is to provide personal finance tools. A lot of the things that Anson was talking about too, engagement features that enable you to better understand your money and deliver a better experience, whether that be budgeting or bill tracking or smart insights, or using the combination of open banking data and AI. We can certainly forecast already, how much money you'll have left at the end of the month. How much can you safely spend? How much should you put to one side? And what happens if you did miss that bill and you didn't pay it? What's the impact of that? And we show that that's happened, 3 times out of the last 12 months. You missed the credit card payment date and you picked up an extra fee that we could have easily avoided. You had the capital, you had the cash, it was just in the wrong place at the wrong time. And so we'll talk to that later about how, the self-driving component, is really exciting. And then lastly, product comparison and ultimately product switching. So, we've got early features of this where we can, we've demonstrated to consumers that if they don't deposit another couple of $100 before the 25th of the month, then they'll miss out on their bonus interest. So you've signed up to a product, you think you're going to do the right thing. We always, there's this, behavioral economic of, that my future self is always the one that gets it right. My future self doesn't sneak to the fridge at 9 o'clock at night and get chocolate that I don't really need, before I go to bed. That future self is always really good. And the reality is, we have that same future self in our finances too. So we always have great intentions. We don't always deliver on that. And, we might need a nudge in the right place at the right time to deliver on that. And I think that's the shift that we have in personal finance features, rather than being a view of what happened to what could happen and what are the opportunities for me to do better, for me to feel better about, the decisions that I'm making. So one of the things that we developed, we were very fortunate a couple of years ago to win a competition and win an award, which was around financial wellbeing. And so that was about us building a financial wellbeing score on the UNSW framework for financial wellbeing. It aligns with CFI in the US, and we got to meet with some of the leading behavioral economists around the world and talk about developing this algorithm. And this algorithm today is, rolled out to about 10,000 people, and it's proving to be more, twice as engaging as a credit score by tracking, their discretionary spend and putting a score against that. So how much do you spend against your income? Are you saving for a goal? What's your debt to income ratio? What's the stability of your income? And we put a score around that, which allows a relative level of volatility in it, that what you do consistently over a 3-month period has a really positive impact on the score that we're offering you. And then we provide information and support and guidance around that, around those features to help deliver a better outcome. And then finally, we offer a qualitative component. So how do you feel about money? And, to date, 2/3 of the people that come onto our app are either stressing on a daily basis about money, or on a regular basis, they're worried about money. And so, that's a concerning stat for me. And that's really why we want to get some momentum into financial wellbeing and delivering these use cases that actually change lives. So just talking about open banking and where do we see that going? So we see the opportunities, a good example of one is building my credit score. So can we use the financial data to deliver a better understanding? So when I was in London, I lived with my flatmate Barnsley. I was incredibly good at paying on time when I paid Barnsley the rent every month. I didn't like debt. I had too many scars of that growing up. So here I was as a great saver, a consistent rent payer. But when I wanted to go and get a mortgage to go and buy a flat in London, they didn't know who I was. I had no credit history, I had no relevance. And in the old world, that would have meant that even renting another property would be challenging because I had no previous rental history. And so we're seeing use cases in the UK, certainly in the rental market, which is, here's this tenant, Gareth, he's really great. You know, he paid his flatmate every month for the last 3 years, always on time. So he'd be a good person for you to rent a house to. Would he be a good person to lend to? Well, actually, the data is there to show that. It's more comprehensive than consumer credit reporting in places. Another is identifying vulnerable customers, and that was kind of highlighted at the beginning of this. So the ability for me to share my financial information with people that I love or that care about me, that can help me navigate money better. You know, you might have a wise uncle that is good with money, and you know, letting him keep an eye on your finances, but not measure and monitor every single transaction. Just call out the ones that are important, the ones that, you know, trigger you know, a cry for help. You know, it could be, you know, we talked to gambling earlier, or alcohol, or, you know, they're things that we can set up these triggers for that can be a reach out. You know, I'm going to set this up, you know, knowingly to share my information with you because I'm not going to ask you to help me when I need help. And so that, you know, that opens up a whole world of opportunities of using data for good, which I think is incredibly exciting. Proactive debt management, we're certainly in a very tough year. 2020, 2021 for me doesn't look particularly attractive. You know, with all of the, you know, the way that we've managed the economy and how that could potentially flow into consumers. And so we're going to need to be proactive on how we help people manage their finances, how we spot financial hardship, when is the right time to reach out and talk to someone about money, offer them a debt holiday. Is it, you know, the way I think about it is it's a domino, right? That when you get into a debt trap, it's a debt spiral. You know, the first domino falls, and then a series of consequences fall off the back of that that are really tough to get back out of. So if we can spot, you know, in advance where the domino is, we can start to offer advice on that, and guidance and help and support before anything goes wrong. And then finally, risk-based pricing. You know, we can see that we could offer a financial product. So it always, you know, baffles me that we have a thing called a credit card, which is 20% interest, and we have a thing called a personal loan, which is 10%, both of them to the same person, which is I'm extending the same amount of money over a period of time. You know, sure, there's some other risk attributes that are associated with it, but does it really justify a delta of 10% per annum? I don't think so. So I think, you know, we have the opportunity to price better for risk. And then what that opens up is an opportunity for us to build better products that are more suited to consumers. And, you know, we're seeing that evolve. I don't think necessarily we've got that right yet with some of the products that we're seeing in market, but we are seeing that consumers are looking for a different financial product to the one that we had before. You know, today, if we put a bunch of people in a room, product people, and said, build a credit card, or so build a financial product, you wouldn't come up with a credit card. It's just complex and doesn't work and makes it challenging for people. So finally, what's next for open banking? Financial information, we can already help consumers in a real way. Two things that are currently considered really change the game. I think the first is the ability to be able to move money. So in a couple of years' time, we'll see open banking write access. So we're not only just reading information now, we're writing information. So with a push of a button, we can move money to be in the right account from a bill. So I can be in my ING app again. I can move money from my CBA bank account into my Westpac credit card, all on the touch of a button. I don't have to switch apps, switch money. You know, that will make it much easier for us to manage our finances across multiple products and ultimately always get a better deal. And that final point is about switching. So, you know, we're certainly in a world where we have digital IDs. We're certainly in a world where I can use my digital ID from one place to another. And so, you know, what is the reason I don't switch banks? It's friction, because I think I've got to give you a whole bunch of information that you don't currently have. And it's also friction that maybe I've got to move all these subscriptions or all of these bills that I've got already. And all of that we can pick up through data, and all of that we can switch with an API. So I think, you know, we can certainly reduce that friction, and we should embrace that opportunity, not build more friction into our systems. We should embrace how we can help people. I guess, you know, really in summary, you know, we've been building this business, or I've been building this business for the last 4 years. Certainly, you know, startup life's challenging, you know, lots of highs, lots of lows. But I think the most rewarding thing about doing it is the people you meet and the communities you create and the opportunities it gives you to grow, the opportunities it gives you to make an impact in the world. And that's why I came on today. It's really great to be here, to be in the company of people wanting to improve the future of finance, to bring a world of open banking in, to become a world of open finance. So financial well-being has a voice now. I don't think it had it a few years ago. So we can do better. I think we must do better, and I'm excited about the future. So thanks for giving me the opportunity to speak today.
Thanks so much,
Thanks.
Gareth. Thank you. So to our audience, if you have any questions for Gareth, we have a few minutes, but I guess I'll start by asking myself, Gareth, is there a customer story on a personal level that's really impacted you and kind of keeps you motivated to keep going?
Yeah, one of the best ones we had really early on was when we were just there were just three of us in a basement, effectively in North Sydney, and it was a single mum that had separated from a partner, and she was living with her mum, wanting to get back out and start her independence again, and she used Frollo to build a savings budget and to manage her finances better, to enable her to get a deposit to be able to get back into a rental and move out of a mum and build her independence and build her life again. And she wrote me this wonderful letter, thanking me for giving this free app into the market, and how meaningful it was to change her life. And the gift that gave us was that we got picked up by Channel 7 for that story, and she was featured on Channel 7. We managed to go out on the segment just before the closing ceremony of the Commonwealth Games. So as a little business, we went from having, I think it was 19 downloads a day is what we were doing for our app, to 19 downloads a second, was a result of this human story around this woman that wrote to me and was willing to share her story with the world about how these kind of tools can really change your life. And so that will always stick with me, and I will always be grateful for Sarah, and I'm sure she's grateful for us too.
Oh, that's awesome. We have a question from the audience. So very much appreciated your talk. I'm very keen to see UpBank and HSBC added to the app. Will this be happening soon?
Yeah, I think Anson and the team are working on an API that we can integrate. So awesome. Yes, we'd love to do that. And HSBC will be slower, I think. But all banks will need to be there by July 21 next year. So what you'll see is them coming on a almost on a monthly basis. We'll be adding more and more banks through the consumer data right rather than screen scraping, which is
amazing.
Awesome.
And then a question from Eliza. Although the open banking environment allows us access and transparency, what might be some thoughts on privacy, data, and regulation in a larger marketplace?
Well, I think the consumer data right is well designed for protection, both security and privacy. It has very close controls on who you're providing consent to, and the ability to withdraw consent from multiple places. So you can go to your banking app, withdraw consent, and then that sends a ripple through the system of deleting that data. And you can do that in whoever you've given consent to. So you can come into Frollo, remove consent, and we'll delete all of your records and remove that back to a nil state, essentially. But I think the framework is really, really tightly governed, and the ability to get access to that data. We had to jump through many flaming, burning hoops to get the accreditation that we have to be able to protect people's data, and we take that incredibly seriously. And everybody in the ecosystem is doing that. So I think we're in for a safe and healthy future within the ecosystem as it is currently designed, and long may it stay that way.
Amazing. Thank you so much, Gareth. We really appreciate you being here and sharing the progress on open banking. So thank you.
Thank you. Have a great day.